Good morning, everyone. Paul Duncan with GammaEdge here. Today is Thursday, the 7th of April. Let's go ahead and get started. Pause it here. Please read this. Very important. When we take a look at the overall index, the SPX, and then the index ETFs, we're seeing kind of a mixed picture, but still what I would consider pretty bearish. On the SPX, we're seeing an increase in the net negative gamma. This is the red wing that you see here. The green wing has dropped, which means the net cumulative call gamma has dropped. Typically, that signifies downside protection and less anticipation of short-term movement upwards. So the SPX is not favorable necessarily to a long-term expansion with the activity yesterday. The SPY, we're seeing a little bit of a drop in the put side of things here. That could be the result of some monetization that went on yesterday. Note we are not seeing any corresponding push upward in the call structure, and what that means overall is that still not seeing an anticipated upside major move. So these are confirming. We're going to color this red with a yellow light, saying, compared to the previous day, still bearish, maybe some cracks in the ice developing on the bull side, but we'll see what happens here. When we take a look at the Qs in the IWM, the picture actually is a mixed. We had on the bearish side, we actually saw an increase in the downside protection, and on the bullish side, we actually saw calls come up a slight amount, not a major amount on the Qs. This is a rotation. It's very, very hard to discern direction here. The back test of this scenario is mixed, really no edge there that we can determine at this time. When we take a look at the IWM, the small caps are just getting hammered. Downside play all the way. We're seeing upside protection continually being added. Calls are collapsing. There is not a lot of expectation here for IWM. For that reason, we're going to color things red with a yellow light just because of the rotation that's going on here in the Qs. But overall, we're not very bullish on the structures. When we take a look at the 1 DTE, we are between the goalposts. What that means is that we've got major negative gamma exposure down here where I've indicated. I've called these out so you can easily see them. And when we talk about the goalposts, we're talking about where the net positive gamma is and where the net negative gamma is. I've also highlighted where we are in terms of the spot price. This was the close as of yesterday, and you can see for the SPX and the SPY, we're between these. When we're between the goalposts, we don't see a lot of pressure, and the closer we get to the zero, which is where the cumulative amounts transition from a net negative to a net positive model, you can see we're some distance away from both of these. And so as we get closer and closer, if we move up, we're going to see less and less dealer pressure, and then this could change as we move north. Right now, net negative expiry for tomorrow on the SPX, net negative expiry on the SPY, same thing with the Qs and with the IWM. Now, let's talk a little bit about Qs and IWM because this is important. We are not between the goalposts here for the Qs and the IWM. We are actually deep in the money, which means when we take a look at what's expiring tomorrow, we're below that primary negative gamma level, and so there is a substantial amount of puts that have to get monetized on the Qs. If they don't, they're going to be holding short Qs into the close, or after the close, I should say. They will be assigned, and that's a considerable amount of money. So I don't think that's going to happen. What I do think is going to happen is we are setting up for a potential monetization event. Same thing here on IWM. Although IWM is net negative, as you saw in the previous slide, we are deep, again, negative in the money here, which means a lot of people are profitable, and we should see a monetization. Virtually no calls here, so if we do push up, we probably won't push up very, very strongly. For that reason, the mixed picture that we have here between the goalposts here on the SPX, the SPY versus the Qs and the IWM, which have a heavy in-the-money presence, we're going to color things yellow because we actually are at a transition. When we take a look at the market model, this is the ARCX cumulative tick. We view this as the quality cumulative tick. We had a failure here. We talked about this yesterday, and basically the bull case failed. We needed to see the continuation. It looked like we were going to get it. We failed, and that really set up the downside here. Yesterday we continued down, but you can see the slope is abating, and that is a potential turning point. We'll just have to see what happens here. For the bulls, we want to see the cumulative tick start turning up here. I will note we are below what we call the historical moving averages, or the ribbon, and this is basically a failure of the bull case, and we are clearly in a bear case. So we're going to color this red, but because of the abatement we're seeing in the overall slope of the cumulative tick, which I think is the best cumulative tick of all the ones we can look at, we are going to color things yellow for a potential upside reversal. When we take a look at the vol of vol, clearly the VVIX closed above the Bollinger Band midpoint. That is effectively bullish for the VIX, but even though we ranged above yesterday, we pulled back, and you can see this morning's action. It's going to be an inside day as of right now. We want to see this actually move above the midpoint. Some folks are actually taking long spreads here. It's probably not a bad idea. I'd give it some time, though. This actually is a setup for a failure, so just be aware that in the past when we've gone across and we do have a tendency to come back down. We'll just have to wait and see, especially with ER coming up next week. Or not ER, OE, excuse me. We take a look at the ES, kind of a mixed bag again. We've jumped up in the COI, the call open interest. This has nothing to do with Gamma. It has everything to do with the single expiry where the calls are dominating, and right now they've moved from 4,800 up to 5,000. I do suggest some scenarios in the GammaEdge Discord about where that could happen. Also note, though, the bullish move up here is not confirmed with what we're seeing here. We are seeing a drop in the true gamma zero and the true delta zeros. That only occurs under some pretty fixed conditions here. So overall, red light with a yellow here. The yellow light stemming from the calls actually being opened up there. Note positive gamma exposure here at 4,700 did not change. So we're not seeing a lot of calls being added, at least at 47. So we think this is actually due, the exposure of the 5,000 is actually due to some calls being closed at 4,800. When we take a look at the expiration across for the SPX combo, the takeaway is that we've gone from a couple days ago where we had net positive expiries across the board to net negative expiries. The saving thing here for the bears, or the bulls, excuse me, is that this can become fuel to the upside if this stuff starts to get monetized, so we're going to have to watch for this. But overall, the picture has flipped. We're in the bear case, and just be aware of that. Taking a look at net GEX by strike, you are here at 44.81. You can see we're at the bottom of what we call a transition zone. Very little dealer pressure in here. Be aware of that. So as you think through your trajectories for today, just note weak pressure. So 44.75, we get a little bit more. We start building into this net negative gamma regime at 44.50, and you can see what happens. I do note this little thing down here at 44.10. Other than that being a little short-term transition zero, we're not using this as anything major. I want to point out to everyone, 4,300 does look to be a downside target. That would be one major goalpost on the left-hand side here. Up on the positive side, 44.50 is obviously what we got to get across. That's going to be difficult to do in the current environment. Could always happen, but it's going to be difficult at this point, especially with the back and forth that we're going to see here. No real events causing that. 4,600 still dominant. I don't see us getting there by tomorrow, but of course, your crystal ball is as good as mine. Taking a look at both the 0 DTE, actually it should be a 1 DTE, my apologies, and the combo complex here on the right-hand side. Starting with the 0 DTE or 1 DTE, excuse me, you can see that we're net negative gamma, fairly strong level. So if everything continues on the same path for tomorrow, we are going to see a fairly strong expiry. It's mostly negative, and so where we are into tomorrow will determine where things head into the end of the day. Might be intuitively obvious, but the levels do matter. The primary expiry for tomorrow on the call side is up here at 4,600. You can see that here at circle 4. Circle 5 is 45.50. That is the dominant short-term GEX expiry for tomorrow. It's going to be a push to get above that, but if we do push above that, I could see us going up a little bit. I don't see us going above 4,600 into the close tomorrow, not from where we are right now. Below the yellow line, which is where we closed yesterday, you can see that we're almost in this net negative gamma environment on the short-term expiry. I could see dropping below the 44.50 level, maybe settling down here at the 44.30, 44.25. We've had a number of questions come in. I'm looking at the deltas. We've got negative deltas here, but we're in a net negative environment here. So I think there is some stabilization that could occur in this particular area. If we do lose the 44.50, we're just going to have to wait and see. If we break below this point, not likely, but if we do break below this point, you can see the 44.05 and the 4400 levels have got double stacked here. I anticipate a level of liquidity in this area, and of course, if we lose that, we're looking down at 43.50. Again, I don't think we're moving anywhere near that into tomorrow, but just be aware these primary levels and the double stacks that we're seeing here should offer a lot of liquidity in those areas, which are pausing points and potential opportunities to play off those. Back over here into the combo complex, and remember the combo complex does not include the SPY. We do not do that. We don't think it's necessary to do that. Net negative gamma overall, fairly strong. It's growing. Yesterday it was minus 34,000. Now we're up to 95,000, negative 95,000. Big shift, though, is what we're looking at. Net negative deltas that we're seeing above us. That's going to offer some pressure on the upside until these start flipping. We just don't see us moving up right now. Downside, net negative gammas, you can see where those are at, and you can see where we closed yesterday. So we're right in this zone. We're right on the transition over here. And I think it's going to be difficult if we play in this area, which is indicated by square 8 over here on the 1 DTE or square 5 here on the overall complex. It's just going to be directionless. So just be careful in this particular area about doing anything. Play off the key levels that you see here. I do point out this 44.15, 44.10 region. We may see a little bit of a pause in that particular area, but overall we are not overly bullish or bearish. We're waiting to see what happens below this 44.50 level, if anything there happens, or above the 45.50 level and pushing north. Trajectories that we're looking at that monetization that I just talked about up in what we call T1 here, for the first trajectories. So keep an eye on the Qs and on the IWM because of that ITM component. The VIX can go either way. We could have a failure on the VIX and drop, or we could see a continuation to the upside. We have a mixed picture here. So just make sure you think through that as the next trajectory. On the cumulative tick, we are bearish for equities. We need a reversal in order to move long. Make sure you understand that. If you don't, make sure you ask questions. And as I just indicated, the lines in the sand for the last trajectory, the 45.50 to the upside, 44.50 to the downside. We got a transitions in both of those ranges from 44.80 to 45.20 or so. I don't think we're going to get a lot of dealer response in this zone, so I would not do anything between this range, and if we're pushing on either side of this range, you might be able to play it off of key levels. So with that, I hope you found this interesting and useful. If so, please join us at GammaEdge.us. That'll take you to a sign-up page for the Discord. Once you're in the Discord, a lot of tools, a lot of great traders, all calling stuff out in voice, and also just challenging each other with what they're seeing, etc. So it's a lot of fun. Follow us on Twitter at GammaEdges with an S, and then on YouTube, if you like this content, please hit the like button. It helps us, and subscribe so you get notified the next time we post something. Thanks, everyone, and make it a great Thursday.